So I mentioned to you that a typical chart in Forex will be of a market moving up and down, up and down, up and down. And I even shared a little picture here, okay, that this is what it would look like. So the market will be moving up and down, up and down, up and down, literally just up and down. Sometimes you can go up and up and up, up, or down, 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 but that doesn't matter. The point is there is a point where it reaches on top, and then there's a point where it reaches down. All right. So this is very, very important phenomena that I hope you will try and remember. It's key, critical. All right. When the market goes up and reaches up at that point up there, and it can't seem to go through it, we call that resistance. Okay. So this is resistance. It comes and it hits there, it comes down. It's like a roof. The roofing in a house hits up, comes down. Excuse me. So it comes, hits up there, comes down. Okay. Similarly, at the bottom, so at the top here, let's just type it down. It is the resistance. Okay, you experience resistance. Okay, resistance. Okay, and then at the bottom, similar thing happens. It comes down, and then it bounces to the bottom. It comes down, it bounces, hits there, comes up, hits there, comes up. So this, like in a house, is the floor of a house, and this is called the support. Okay, support. Now, support and resistance will be your friends from now on going forward. Okay, if you want to be an expert, you want to be good in Forex, please remember what is resistance and what is support. Why? Because those two bounces cause the market to continue moving. So when the market moves up, it bounces down. It moves down, it bounces. Okay? So that is what we call support and resistance. The reasoning behind it is a bit technical, but I'll give you like a simple, watered down reason. Okay? It's more of psychology. Okay? There's a bit of economics in there. There's supply and demand, the law of supply and demand. If at some point, there's no demand for something, then the price will change. Okay. Then there's supply. People will go in, buy, or sell. And then when it reaches a certain point where people are not interested in that price again, then again it will change. The demand will change. So it's a supply and demand. But what is supply and demand? Supply and demand, the reasoning behind supply and demand is a bit simple in explanation, but technical in trying to get people to understand. For example, again, without any bias, supposing I live in Kibera or Madare, and bread around there is about 25 or even 30. So if bread in Madare is 25 shillings or 30, okay, if somebody has a shop and they decide they're going to sell bread at, 26, people will still buy. 27, people will still buy. By the time you reach 30, there's going to be fewer people buying because people are price sensitive. If the price of bread there continues to like 40, I can almost assure you that maybe half the people in Kibera or Madara will not buy. By the time the price goes to 50 or even 60, maybe there'll just be a trickle. But if the bread is 80 shillings, nobody will buy in Kibera. Nobody. But that might not be the case maybe in town, CBD. In CBD, the opposite might happen. If the bread is 20, 30, maybe most people will not even touch it. They'll say that's low quality. They won't even want to buy. But if the bread is 40, 50, 60, 70, people will buy. In fact, there's a perception that the more expensive the bread is, the more they will actually buy. So it's almost psychological. However, even in town, if the bread price goes to about 100 and 110, then people will start shying away from it. In fact, 150, nobody will even touch it. That is CBD. But then, similarly, you go to upscale market. Maybe you go to Mutaiga or Lavington or whatever you call it in Karen. You go to a supermarket and you're selling bread for 30. They'll think that is dog food. I mean, not literally, but yeah, they wouldn't even touch it. Okay, 50, no. 80, 90, yeah, that's they'll consider that's okay. That's okay bread. When it's 100, 110, they'll probably be buying it. But when it gets to 150 to 200, they'll probably be like, hey, this is a bit expensive. So at 200 shillings, maybe very few people will even buy the bread. And I'm sure by 250, nobody will be touching the bread. But again, that is Kenya. If you go to other countries, maybe that's the starting point. Okay. So what has that got to do with the price we're talking about, the market structure? Well, it has everything to do with that. Psychologically, it means at this price, nobody will want to touch this market if it continues going high. Hence, the market will fall down, the price will start falling down. Okay. Similarly, below a certain point, nobody will want to buy it. No, nobody will want, because of the perception that cheap is useless or expensive in that case. So people will start buying. So this up and down thing continues up and down continuously during the cycle of that market. So that's the most important thing you need to know about support and resistance. There's a psychological barrier beyond which people will not touch that price. Okay. So for you in Forex, the only thing to understand is, well, if you think the market will go beyond a certain point, your best shot is to look at what was the last high. Chances are the market will still revisit the last high or the last low. So if the market is going up, I need to find out, okay, where was the market last? And you'll find that will help you a lot in your trading. Okay. Again, if you're trying to maybe figure out where the market will reach, okay, you are in the market and you're trying to figure out where the market will reach, where you're buying, and well, the best thing to do is to look at the last high. So the last high will give you an idea. Let me see. All right. Okay. Trying to get this pen. Yeah, here we go. Okay. So if the market is going up, let's say it went up like that, then okay, then came down, and then went up, and then came down, then went up, and came down, then decided now it's going to go up, chances are the best thing to do, if you want to know how high this will go, if it has passed this point, if it has passed, if it has passed this point, chances are it's going to shoot for that point. And if it passes that point, chances are it will shoot for that point. So as the market goes up, okay, as the market goes up, you watch, you ask yourself, okay, take profit. If you're taking a trade, then you make that to be a take profit up to there. And then from here, it will come down again, and then it will go up. If it goes up, what will happen? It might pause there a little bit, but this time it's trying to get back up here. Okay, trying to get up there. When it gets there, it does one of three things. It either plays around there for a little bit, and then that's number one, plays around. We call that consolidation. Then number two, it either breaks up to the last high, that's the second option, or the third option, it might come back down. And guess where it will go if it comes back down? you come back down to this last low over here. So this support and resistance points are very significant because in the market structure, the market always follows support and resistance and only jumps from one support to the resistance and from the resistance to the support and vice versa. Which means whenever you get into a chart and you mark your support and resistance, half your work is done in trading. Why? Because you just trade between those support and resistance. And guess what? Not many people will tell you that that is the key to success in Forex. So if I forget anything, if I don't say anything, remember the support and resistance are the key to success in your, in your journey in Forex, which means trade within support and resistance. If you trade between support and resistance, you will have success. Okay? You'll have great success. All right. Looks like the people were still stuck outside. I don't know how they got outside anyway. All right. So, having talked about support and resistance, which are very, very, very important, the next idea is just built up on support and resistance. Okay? And that is what we call the price cycle. Now, I'll clean this up, but then I'll share what price is all about. Oh, by the way, I hope I'm recording this. Oh, okay, good. Okay. All right, so we know now about support and resistance. Hence, I'm introducing something we call price cycle. So, as technical analysis purists, so to say, we believe the price operates within pure constructs of price rotation theory, trend theory, technical indicator theory, and price cycles. We found that technical analysis distills many news items into pure technical trading signals. So, what are we saying? What I'm saying is the movement of markets up and down, okay, is actually fundamentally called the price movement. Okay, so this price is the ultimate indicator in trading forex because the price determines the current trends, support resistance levels, channels, past price peaks, troughs, and much more. When you apply price modeling and price cycle tools, we can gain a very clear picture of what price may attempt to do in the near future or even as far as a few months into the future. Price, as the ultimate indicator, truly is a mathematical core element of all future price activity, trends, and reversals. What am I saying? What I've just shared with you there is a nugget in Forex. Again, very few people will tell you about something called the price cycle. In fact, you can Google it yourself. You'll find that it is not mentioned a lot. Yet, I'm going to focus on that because it is going to be the key of your success. Okay? The price cycle. So, what is a cycle? Cycle is a recognizable price pattern or movement that occurs with some degree of regularity in a specific time period. The analysis of cycles shows as support and resistance that represent smart places to anticipate a reaction in the price of an asset and therefore represents a basic tool in technical analysis. So again, what am I saying? What I'm saying is when those markets move up and down, essentially we're talking about price. So a complete cycle is one circle if you draw a circle, okay? But for many of you in Form 1, Form 2, you may have studied physics. So this is considered a cycle or a circle, all right? So if you divide this circle into quadrants, okay, and you connect them, then essentially what you have is something like that. There. So it's from there, it goes down, that's 180 degrees, it goes down up again. So that is considered one price cycle. All right. Now, what we do in Forex, we kind of do the same thing. Only what we do, focus mostly, is the last high and the last low. All right. So we consider this, a different color here. Okay. The last high, the last low, we consider that the price cycle. Okay. In other words, this price, how high will it have reached and how low will it have reached? Now, that is key. It's key to our trading. Why? Because if the market is here and the highest it goes is there, okay, and then from there it comes down again, okay. So as a trader, your goal is to go up with the market, which is a buy, or to go down with the market, which is a sell. But you are not guaranteed that the market will reach that high, okay? And that's where now probability comes in. Okay, for those of you with a technical background, okay, if this is the low and this is the high, okay, the probability of the market hitting the high there, assuming that is the ultimate, that is 100%. The probability when you get there, you'll have hit 100%. Okay, but this is the starting point. This starting point, and it's going up. Your probability to reach that high diminishes with time. Okay, your probability down here is high to get a number, let's say A, B, C. Okay, I'll ask you a question, but of course you can't answer it. The probability as the market goes up of hitting A versus hitting B versus hitting C diminishes as the market goes up. What am I saying? What I'm saying, you have a higher probability of this market, if it's coming from here, for hitting A before it hits B, before it even hits C. Okay, our goal is to reach up there. We are not guaranteed the market will get there. It might start going there and then reaches at B or even at A and decide it will turn, it will go down. Okay, or even at A or even at C. So knowing that, to me, is the game changer. That is what I'm teaching you guys, specifically my strategy, which I'm calling scalping. I'm teaching you not to be greedy, not to go for the whole 100%, but to use mathematics and shoot for small bites in the market. What do I mean? I mean, rather than go for the 100%, if we can just get this small bite here, okay, and make that frequent, okay. So if this is 2 pips or 5 pips, okay, you have higher probability of hitting the 2 pips or 5 pips than, let's say, if this is 10 pips, 10 pips. You have higher probability of the market hitting you at 2 pips instead of 10 pips. So, simple logic. If this is 10 pips and you want to hit 10 pips, well, you can do two things. You can take one trade and shoot for the 10 pips, or you can take smaller trades. You can take maybe 5 small trades of 2 pips, which will give you 10. Now, which one is easier to do? Is it easier for the market to come from here and go up to here and you're done, you've got your 10 pips? Or is it easier for the market to come from there and go all the way up and get your 10 pips? Now, I can almost tell you, and you can guess, probability is higher for these 2 pips to be reached than the 10 pips. That is the power of scalping. If you ever hear anybody is a scalper, then it is based on that idea. It's based on probability, based on reality of the market. Don't shoot for high numbers. Shoot for small pips, but make them many. That is why in your homework, you'll find that getting the 50 pips or the bigger high pips will be more difficult than the smaller ones. Okay? So, at the end of today, all I want you to know that is you can make very many pips by taking small pips. Simple logic. I'll pause it there. I'll allow you to give me a question or 2 or 3, and then we'll call it a day. The assignment today, going forward, will be on scalping, on how to get these small pips. Now, the same applies on the sell. This is a buy. I gave an example of buy. On the sell, same thing. You are up there, and the market is coming down. It is easy for you to take a small bite up there rather than shoot for the whole bite. The whole bite might be 20, 30 pips, depending on the time frame. But you don't want to shoot for that big. You only want that little one. But you make them many. Play with numbers. It's called probability. It's called mathematics. That's what you do. You play with numbers to make what people are struggling to do. In the market, you hear guys are shooting for 100 pips. Oh, I'm excited today. I have a trade that I'm waiting for. It's 100 pips. Like, so what? You can do 100 pips with the eyes closed. How? You just shoot for 2 pips and then you take 50 trades of 2 pips, and that gives you 100. All right. Questions before we close?
How soon are we expecting this particular recording to be shared with us?
As soon as the class is over.
Okay, that's good.
Okay. Any other questions?
Maybe for the chart, are we using the same chart or creating new chart every time?
For now, you use the same chart. Use the same chart. You don't have to do anything new. Same chart. Okay. If you feel you want to do another chart, that's fine. Again, I'm not particular about it right now.
But by chart, what exactly do you mean? Do you mean the one we create in City Trader?
Yes, on CTrader. So let me stop sharing this and I can share the other one we had. So let's make it very simple. It's not complicated. It's not complicated. And let me see. There. So I think Collins asked if you wanted. You can use the same chart. Okay? But if you find yours is messy, again, I will not stop you from creating another new chart. You can add new chart, and then you can choose the currency you want to use. I normally use Euro USD, and I suggest for now, just use Euro USD. If you start digressing to other currencies, it gets a bit complicated. So use Euro USD. Why? Because as you get to know the market, as you get to know the currency Euro USD, then you're able to trade that market. Now, this is based on the simple logic or principle that if you want to know somebody or something, spend time with them. Then you'll know them, you'll know their behavior, you'll know everything about them. So my suggestion is you focus on one currency, which is Euro USD, and Euro USD is the most liquid and volatile currency in the world, which means if you're going to trade Forex, you want to go to a market that moves a lot, okay? That has high volume, which in this case is Euro USD. But more importantly, you spend more time knowing it, then you know how to quote it. You know its behavior. You know what it does when it reaches the bottom or the top, instead of doing 10 different currencies. Okay, So yes, here we are. And the price cycle, again, like I said, you look at the support and resistance. So for me, what I would do, I would probably go to a higher time frame, which is H4 for me, because I trade during the day. So I click on H4. This is what I get. Then minimize it, okay, like that. Once I minimize it, then I draw support and resistance lines. Support and resistance lines are very many. Okay, you can draw so many, but I do just the major ones, where the major one is like the top and the bottom and a few significant points in the middle. So this is the top, the last high, probably up there, but anyway, I'll put this one here. Okay. Then last low, what we have recorded there. Then from there, again, don't think too much. Just look and see which points have been visited a lot by the market. I can see this point has been visited one time, okay, 2 times, 3 times, 4 times, all these points here, all those points. So it means that there's a significant support resistance point there. Similarly, as you start going down, you see like this point, maybe this one here, okay. Again, you can just see, you can just look and see. And these things come with practice, you know. You can look at the chart and say, which point has been touched so many times? It has been touched there, been touched there, touched there, touched there, touched there. So it's a significant point. So these are the support and resistance lines. Now you'll probably ask me, so is this just resistance and this is support, and what about the rest? Well, they are support and resistance depending on which side you're coming from. All these lines are support and resistance depending on which floor you are talking about. It's like if you go to a 20-story building, okay, each floor is a roof and is also the floor. So right here, this, okay, at the bottom here, as you're coming from down, it is resistance. Okay, so this is resistance. As soon as you get on top of it, it becomes a support, like a floor. But when you're here, then you come here, this is resistance. But if you get on top of it, it becomes your support. As you go up, this is resistance. As you get on top, it is support. As you go up, this is resistance. Get on top of it, it's support. As you go up, this is resistance. You get on top of it, it's support. Similarly, as you come down, this is resistance. Then it is resistance. You come down, it's resistance. This is support. Come down, resistance, this is support, and so on and so on. So the name support and resistance depends on where you are and where you are going. But technically, it doesn't matter what you call it. What you just need to know is significantly the market seems to pause or lose something around support and resistance. That is the nugget. That is the most important thing to know. So when you're trading, ask yourself, where is the market? Are we on any support or any resistance point? If we are, then be expectant because something is happening or is about to happen. Okay? In between, not much, but always at this spot, something is happening. And now you as a scalper, you as a trader, that's when you enter your trades. You enter your trades around or near support and resistance. Okay? Near support and resistance. So I'm going to do one more time how to enter, how to mark your support resistance. Maybe let me look for another market. Again, for the sake of example, I'll probably pick USD JPY. Okay. And then you minimize the chart as much as possible. So this is 1 hour time frame. All right. And then I just quickly click on where I think the market was touching several times, including the highest and the lowest. Okay, the lowest is here. So then I'm just going to do it quickly to show you that this thing, don't think so much. Then again, you can't be 100% perfect. because there's nothing like perfect in forex. Okay, so you pick your support and resistance. Of course, it can be better, sometimes, and this comes with practice. So if you look at these things I've done right now, you'll find that the market respected those zones, those places. Okay, which means at any of those points, if you were, the market either had three decisions. Either it was just going to play around, like here, to play around, and then to go up or come down. Okay, so there it will turn around. Okay, play around, go up, come down, go up, come down. Okay, go up again, come down. You know, so support and resistance are going to be your friends, and you need to know how to mark them in the market. How do you mark them? On the right hand side, that horizontal line, you click on it, then you come and look at the chart. If you think it's here, you click there. There, you've placed it. Okay. Now, how do you take advantage of that? By looking at where the market is right now. The market is here right now. So where will it go? Simple question, but simple answer. One of three things. Okay. The market will either, there's what we call consolidating. Okay. Where consolidating means it will go up and down for a while. That's number one. Option number two, it might decide to go down to the next support. That's option number two. Option number three, what might it do? It might return up there. There, finished. So at any given time, if you look at the market, it's doing one of those three things. It's either consolidating, okay, in that case, there's a way of trading that, or it's going down. But if it's going down, you know where it's going, or it's going up, and in that case, you know where it's going. What more do you need? That is Forex. That is how simple it is. All right, we have 5 minutes to ask questions, and then we call it a day. Any questions? So this is all simple, understood. So when I give you homework, you will do it. Please do it before Wednesday class. This week, unlike last week, we shall have 3 classes. We shall have today, Wednesday, and Friday. I just need to catch up on some of the topics I needed to, because I want next week, I want us to shift gears now. But by the end of this week, we will be focusing more on how to take targeted tips, how to make tips from the market, which is my goal by the end of this week. So that by the end of the week, if I can say I want 50 pips, well, of course, some of you can do it right now, but it's going to be easier by the end of the week because of the new knowledge you have. You get to the market, you look and find out where am I, okay? And knowing where I am, can I then take profit, etc. All right, I don't see any questions. So seeing no questions, then I'll call it a day. We shall continue becoming better in terms of our timing. Thank you for those who came early. I think I'll have to learn to start right away so that we can finish on one shot. Please do your homework. That is the only way to learn. There is no shortcut to learning. You have to do your homework. I don't have to remind you. I actually have to remind you guys that, hey, you have a homework. I send a WhatsApp and I send an SMS. I should not be doing that. Maybe going forward, I will not do that. It's up to you. Do your homework. If you have a question, you ask in the group. Why? Because others might have the same question. Okay? Share your results with the group. Why? Because that way people will learn and they will teach you. There are others in this group who have done this before, and actually they are very good. So let's take advantage of all of us, all our knowledge. Okay, have a good day, and see you on Wednesday at 7 o'clock. There will be homework. Please try and finish it if I can, if you can, even today. Okay, and the rest of the time, do your reading. And for now, price cycle, market structure.
Okay.
Hello? All right. Good day.
Good.